Welcome, guys. We are live. I just want to check that you guys can hear me first, that everything's working. I've just seen that chat there. What is this music? I love it. I'm not actually sure what track that is or where we got that. Maybe I'm not sure if Jose's on the chat. Maybe he can answer that question. But we're on YouTube all the time, so you can always tune in and listen to it for the 10 minutes countdown every day if you want to. So is sound okay? Can you guys hear me? Can you guys see me okay? Is everything working as it should be? We've got a little bit of a delay there, so I'm just checking. I don't want to start if I'm not broadcasting correctly. Okay, I'm going to assume I'm not seeing anything in the chat. I'm going to assume that it's okay, just because I don't want to sit here silently, just, if it's not working. Obviously, you guys let me know. Okay, right, I've just seen that. Sorry, I think there's a delay there in the chat. Great, you can hear me. Brilliant. Let's get started then. So my name is Becky. If you don't know me already, my email address is there. I know it's on its side. Just turn your head a little bit. It's becky@traddictiv.com. So if you want to email me, if you have any questions about anything that I cover in the session or anything about the UFOs or the autoclimate or any of the technology that I use, you can email me, becky@traddictiv.com. There's a better way to do it, actually. The reason I say it's better is because it's a more public forum where other people get to see your questions and the answer to it as well. So the way to do that is to go to this link here, which is tradewithufos.com/Becky. And if I just open that up there, this is what you'll see. So you'll come to this page, pretty simple page. There's not much to it. Doesn't need to be much to it because the point of it is that you can come down here, and if you're signed up for the free membership, you can ask a question here, and again you can read the answers. So if you come down here a little bit, scroll down to the bottom, you can see where other people have asked questions, and you can see the answers to it by clicking on them. Now, if we come back up here to the top, in order to set up your free membership, all you need to do is just fill in your full name and email address, click I'm not a robot, and then follow it through to the next steps. It's a handful of steps in order to set up your free membership. And then from that, like I said, you can ask a question as well as see the answers. So other people will see the answer to the question that you have. Normally, if you guys have a question about something, somebody else has asked it or somebody else will ask it. So it's a good place for people to sort of be directed to the same place where they can get those answers. You'll also get things like discounts. Obviously, Black Friday has just come, so you would have got discounts through Black Friday. You would also get recordings to our YouTube sessions as well through the free membership. So all you've got to do is fill in that information there and you'll get that. Now, I just need to go back here and just show you the disclaimers there. So you'll see it's kind of highlighting as we go. Of course, it's important that you guys read that. It's important that you understand not just the legalities, but that, of course, there is risk involved when you trade, and you need to know and understand where that risk is, and the responsibility of trading and the trades that you place is on you as the trader. I'll give you a demonstration as to how we use the products, how we use things, but ultimately it's up to you. Just because I put a trade on or I think a trade is a good idea doesn't necessarily mean that it would suit your trade plan or be something that you should do. So we are in the Trade with UFOs solid as a stock session. So as the name suggests, we are looking at stocks today. Now, the good thing with these UFOs is that if you guys are trading Forex or futures or options as well, you can still use this technology across the board. Of course, you'd apply it in slightly different ways and layer different things on top of it. But ultimately, understanding whether or not to buy or sell, and then where to buy or sell, which is what we cover, what we look at, applies to everything. So although this is stocks, if you're maybe a Forex trader mainly, then the same kind of principles apply, which is great. As we go through, if you guys have questions, you can write it in the chat, and obviously I'll answer it sort of live. Otherwise, like I said, go to tradewithufos.com/Becky to ask your questions after the fact, and then I can answer them publicly. So first thing we're going to do, let's go to TradeStation. I'm just going to get rid of that thing because it's annoying. We're going to go to TradeStation, and we're going to look at firstly what we did last time, or the trade that we put on last time, and whether or not it's still a valid trade. For those that might be joining new, and therefore you didn't watch last time and you don't know why we put this trade on or what this trade was, what it means, why we did it, what the lines on the screen mean, don't worry, we'll go through that when we look at new trades. Essentially, all we need to understand is that with this trade, we got in at 38, or we wanted to get in, that was our entry price, at 38.69. and our stop was 39.16. We then had a safety target here at 38.22, and we had a final target, there you go, at 32.37. Now, as we can see, this top line was where we wanted to get in, and price never came back to it, which means we never got into the trade. We were never filled on our entry. It was never a trade that we were in. Now, obviously, that's a bit of a shame because it means that we missed out on this move to the downside here with GDX, which is a gold miners ETF. But we would obviously much rather not get into a trade that could have worked out for us than get into one that goes badly for us, or at least that's my stance. So whether or not we're going to keep this trade on, could this be something that we leave here, hoping that essentially maybe price goes up and gets us back into this trade? First of all, we need to understand if that's still a clever thing to do. So that brings us back to the strategy, brings us back to the steps that we go through to decide whether or not to take a trade. Now, the steps that we use to decide whether or not we take a trade are the same steps we use to decide whether or not we stay in a trade, whether or not it's something that we're still going to be leaving in the markets ready and waiting to get in. It's a good thing for traders, whatever you trade, to be actively managing the trades that you've put on. Just because you put on a trade yesterday or last week or last month that was valid at the time doesn't mean that it's still valid now if the circumstances have changed, if the situation has changed. So that's why we want to be analysing these things as we go. So first thing we want to look at is this was obviously a short trade. We are using a red UFO. So we're using a short trade here. We were going short on this trade. Is going short still a good idea? Now we come over here and this is our auto climate on this bottom left-hand corner. This is our auto climate app. All we need to care about at the moment are these 3 red dots at the end. Now, the fact that this last one is a thick red dot tells us it's still a good idea to be looking to go short. Now, whether or not it's still a good idea to go short at that point is a different thing, but still a good idea to go short. Bearing in mind that we have a thick red dot, meaning probability to the downside. That's what the Auto Climate app shows us here. Also, we can see that usually this market would go down. This number here, you might not be able to see it, it's pretty small. It says 6.87. So the market goes down for 6.87 candles, which let's round that up. Let's say 7 candles. Market goes down for 7 candles, and we are currently on candle number 3, meaning it still has probability to move to the downside. Now, just because we should be going short, just because we have probability to the downside, doesn't mean we just sell at any price. We want to get in at good areas where we can keep our risk managed, keep our reward as high as possible, and our probability great. Now, at the time when we did this would have been 2 weeks ago. At the time, the right place to do so was here, at this red UFO. However, that's probably changed. So let's have a look. Now, we use our EMA value, our EMA price, to line up with our UFOs to tell us that we have a good opportunity to go long or short at a specific area. Again, if you guys are new and this is a little bit confusing right now, don't worry. I'm going to go into it bit by bit as we look at new opportunities. So we'll see the EMA value here is 37.31. Now, that is round about, I guess, here-ish. So the EMA value is in this red UFO, not this red UFO. Meaning the one at the top, the one that we had on, the one that was the trade that we placed, is no longer valid. Because if price were to come up, the EMA, yes, would come up with it, but it's unlikely unless it goes up slowly. If it comes up quickly, it's unlikely that the EMA is going to fall within that UFO. And if it comes up slowly, then it's likely to change the auto climate values anyway. So our new and obviously closer now opportunity for going short is actually going to be this one here. That's the one we're going to look at. Now, I've just realized that for some reason I'm disconnected from TradeStation. So give me a sec. I'm just going to log back in. And we should... That's strange. That is strange. For some reason it's telling me I can't log in, which is not helpful. We can go and look at TradingView instead, so we could look at that. Okay, we're going to have to look at TradingView instead. It's same thing. We're still going to be looking at the same market. Just for some reason it wasn't connecting to the data there. It's a technology issue. Okay, so this was where we had our entry and stop on that trade before. I'm just going to add our indicators on here. So I'm going to add, autoclimate's already on. I'm going to add my UFOs. And we were looking at a 144-minute chart. Just take off one of these autoclimates. Okay, so for you guys that use TradeStation, you can continue to use TradeStation. TradingView is also something that we use on placing trades and analyzing trades. So we're going to stick with TradingView for today. Again, same thing. The UFOs are going to be highlighting the same areas. The autoclimate is going to be showing us the same thing. Now, just to bear in mind, I know I just said the autoclimate is showing us the same thing. This looks different because we're on a different time frame. The time frame for the autoclimate was the daily, and the time frame for our entry was 144 minute. So what it's showing us here is the autoclimate for the 144 minute. We don't care about that. We use the daily for our autoclimate. So I'm just going to delete that as well, make this nice and easy. So the one that we were looking at where it lined up with our EMA value was now this one. Again, it looks slightly different on TradingView versus TradeStation, but it's highlighting the same areas, the same prices. Now, the good thing with stocks, as opposed to maybe Forex, is that it is a centralized exchange, meaning the prices that we see are the same. Whatever broker you use, you're looking at the same prices. If you were to be trading Forex, you might notice that between brokers, the UFOs might look slightly different, or they might show you slightly different prices. The reason for that is because obviously the data feed is not coming from one central place. It's coming from the interbank feed. You're getting loads of different prices coming through. So what you see on one broker or one platform might look different to another. Although it might be laid out differently on TradingView than in TradeStation, just based on the software, the numbers that we see, the prices that we see, the areas that are highlighted are the same, which is helpful when we're doing stocks. Okay, so this was the trade we were going to place. What I'm going to do, I'm just going to split this so that I can show you, wrong one, so that I can show you here what the autoclimate was. So let's add autoclimate as well. Here we are. And GDX. That's what we're on. GDX. Oh, that's why we want a weekly over here. I was confusing myself then. So we want 1 week. There we go. Brilliant. So we've got these three thick red candles over here, or three thick red dots over here telling us that we can go short. And we have our entry situation over here on the right hand side. So we want to go back to 144 minutes on the right hand side. And we want to take this off and add our UFOs. Sorry guys, I was expecting to do this on TradeStation today, so I'm just setting it up. Here we go. Okay, so this one on the right hand side, this is where we're going to be looking to go short. Now, if we're looking to go short, we could take those numbers just as they are, the numbers that are highlighted here. So we could go short at 36.95 and put our stop at 37.37. Although we might want to add just a little bit of wiggle room. I personally like to give it 10 cents extra. So instead of 37.37 being the stop, I would prefer to have it at 37.47 just to give it that extra bit of room. You guys don't have to do that. You might have a 5-cent rule or a 20-cent rule, or take it exactly as it is. The most important thing is that you're consistent. So if you're adding 10 cents, add 10 cents every time. Or if you're adding a percentage, add that percentage, 2%, 1%, 0.5%, whatever, every time, so that you're consistent. If you sometimes add wiggle room, you sometimes don't, and it's different numbers without a rule as to why they're different numbers, you don't know what works better for you and what doesn't, and it can lead to you changing your rules without you realizing you're changing your rules. Consistency is key. So if we're going to go for our entry here, let's just make this a bit bigger. If we're going to go for our entry here at 36.95, we can just come over here on the left-hand side, click sell, and we can just type in here what we want that number to be. So 36.95. Now, by the way, the first thing we would have done is cancel that prior trade. So the one that we had in from up here, 38.69, if you had that in your systems, or if, like for me, if I had that in my live trading account, it would be a trade that I would have cancelled because it's no longer valid. So we do that first before we put this new one on. So 36.95 can be our entry. Our stop, 37.37 plus 10 cents is 37.47. That is our entry and stop prices. Now, the great thing about using TradingView to do this is that it does a lot of the maths for you, does a lot of the calculations, so you don't have to necessarily bring up a calculator or use an Excel spreadsheet or anything like that. It's kind of taken care of for you within the software. So we can see here that what we are risking between the two, if we were to have one share, is 52 cents. So 52 cents per share. That's what we're risking between our entry and stop. Now, again, the amount of units that you place, the amount of trades that you place, the amount of shares that you trade is going to be absolutely relevant to you, your trading account, your risk tolerance, your trade plan. So again, whatever number I pick, and I'm just going to pick 100 just because it's a nice round number, whatever number I pick is not necessarily representative of what you guys should be doing. That's up to you. It might be bigger or smaller depending on you. Again, we want to try and keep consistent. Let's say you choose to risk $100 on a trade. You want to make sure that all of your trades risk $100, unless you have a specific rule to tell you why that number might change, rather than kind of make it up as you go and decide on the day what you fancy risking, or that one looks like it could shoot to the moon, I'll put everything on it. No. We need to be strict, consistent, keep our risk managed in a healthy way. So I said I would risk 100 shares. However, I'm going to have two targets, which means I need to have 50 shares on one of them and 50 shares on the other. So I'm going to split it into two. So instead of me typing 100, I'm going to type 50 units. That means I'm risking $26 exactly, $26 exactly if I go short 50 shares. And then, of course, I'm going to have another 50 shares where I go short. So overall, it's going to be $52 that I'm going to be risking. Now, that's what I'm risking, but where am I going to take my profit? Where is my target going to be? Now, for us, we normally have two different targets and we do it for a reason. Again, it's not necessarily something you guys need to do. It depends on personal preference. So the first target we have is a safety target. The reason it's called safety target is because you're more likely to hit it. It gets you to safety, to a point where you are less likely to lose money quicker. That's why we use it. Now, having a safety target can reduce overall the amount of money that you make from a profitable trade, but it can also increase the amount of times, increase the amount of times you'll break even, which essentially decreases the amount of times that you lose. So if we're taking this area here, and just before we enter all of this, let's just draw some things on the chart here. If we're taking this area here, and I've customized my Fibonacci lines here, to just be able to draw around things. I don't use Fibonacci in the way it was intended, so don't worry if it doesn't look the way yours do. By the way, what I'm doing here is the same on any, on TradeStation and on TradingView and on most platforms. If you draw something on a chart, you can then double click on it and specify exactly what price you want it to be correlated to. So for me, I want these numbers that I've just drawn on the chart, these lines that I've just drawn on the chart to align with my entry and stop numbers. So I'm just typing in here 36.95 and 36.47. So if I click OK, you'll now see those lines have moved slightly and they are exactly where I want them to be. It gives me easy reference later down the line as to where my trades were and what the numbers were. Of course, you would keep a log separately as well, but I just find it easier. So if that's my entry and stop, my safety target needs to be the same distance away. So if I'm risking $26 on this trade, I want my first target to be the equivalent $26 away, or 52 cents in movement. So what I'm going to do, I'm going to grab a horizontal ray. Again, you can do it in different ways. This is just my preference. I'm going to draw that on the chart. I'm just going to make it thicker. If we can make it thicker, there you go. And make it green just because it's a target. Now, to know exactly where I want to put that, that's what's cool about TradingView as well. I can click here, take profit, and I can figure out if it's 52 cents or 52 pips, then I can put 52. It says it in pips, but obviously this is stock, so it's cents. If I'm risking 52, then I want my target to be 52. It's a one-to-one situation. So rather than work that out what that needs to be, I just put in, do the same, whatever that number is, just copy it, and then it will tell me the price that is equivalent to. So hopefully that makes sense. So now the price of where I'm taking my safety target, 36.43. So I'm just going to double click on that line that I just drew, go to coordinates and put in 36.43. That line will move slightly. You saw it move a little bit, and that is now highlighting for me exactly where my safety target is. So I'm just going to double check. You always want to make sure you double check and you get these things right. I'm going short. I have a thick red dot on the auto climate. That tells me I have probability to the downside. I know that I have a likelihood of it continuing to move to the downside because it's only moved 3 candles to the downside on a weekly chart, whereas usually it would move down 5. Let me move that over a little bit so we can see it a bit better. There you go. Move down 5, round that up.